Hello, and welcome to Revamping Retirement, a podcast brought to you by Camac Retirement Group, where we tackle the retirement plan-related issues plaguing fiduciaries and plan sponsors. Our host, Mike Webb, has more than 25 years of experience in the retirement plan industry and is a nationally recognized subject matter expert. We hope you enjoy Revamping Retirement.
Thanks, Kara. Kara McCauley is always our producer. And welcome to another exciting episode of Revamping Retirement. My name, as always, is Mike Webb, and we have a very special guest today, a contributing editor for Investment News. I know her as the leading, if not one of the leading experts in the country on Social Security. She's certainly my leading expert in the country. She's the author of the book, Maximizing Your Clients' Social Security Retirement Benefits. Welcome to the program, Mary Beth Franklin. Mary Beth, how are you doing today?
I'm doing great, and thank you so much for inviting me to be part of your podcast.
You're quite welcome. Real honored to have you here today on Revamping Retirement. Let's get right to it. Most of our audience probably knows who you are, but we do get some participants and some people who might not be familiar with your name. So I always start out with if you can give a little background, how did you become I didn't learn about Social Security in college. I suspect you probably didn't either. Maybe you did, but how did you become a Social Security expert over the course of your life?
Well, part of it is professional and part of it is personal. The professional part started early. Way back in the 1980s, I was a Capitol Hill correspondent for United Press International, and I specialized in covering the federal budget, taxes, and Social Security reform. I actually saw the sausage being made back in 1983.
Wow.
And I stored a lot of that information. I always kid people that you didn't know they hired 12-year-olds back then, did you? So I was a Capitol Hill reporter writing about Social Security reform, which way back in the 80s, Social Security was in danger of not being able to pay promised benefits. And what they did back then to fix the system was amazing and actually would have lasted in perpetuity. We would not have to be worrying about Social Security eventually running out of money, except for the great abyss between how much people earn. And the reason I say that is we pay Social Security FICA taxes, payroll taxes, up to a taxable wage base. This year in 2020, it's $137,700. People who earn more than that do not pay FICA taxes for Social Security purposes. They pay a little bit for Medicare purposes. Back in 1983, the Greenspan Commission, Alan Greenspan, long before he was chairman of the Federal Reserve Board, actually was chairman of the Bipartisan Commission on Social Security. They said back then, as long as 90% of U.S. wages were taxed for FICA purposes, Social Security would be fine for the foreseeable future. The problem is only about 83% of U.S. wages are now being taxed for FICA purposes. So when you hear about what are some of the potential reforms that could get Social Security back on track, that's why you hear people talking about raising the taxable wage base to capture more of those U.S. wages. The tax rate wouldn't have to change, but more income would be subject to tax that would bring more money into the system. Now, you always get complaints from the employer side of this. Hey, because the employee pays half, the employer pays the other half. It's usually small businesses saying, hey, it's going to ruin it. I usually say, how many employees do you have in your small business making more than $138,000, unless you're a law firm or a medical practice?
Good point.
So I think that's one of the changes you will hear talked about down the road. We have known for years, if not decades, that eventually there would have to be some financial fix to the Social Security system to keep it going. The latest Social Security Trust Fund report basically said by 2034, the trust funds, which are the excess money that have been collected over the last 30 years in FICA taxes, will run dry. What does that mean? It does not mean Social Security is going bankrupt. It means there would only be enough money from ongoing FICA taxes to pay about 75% of promised benefits. Now, nobody is going to be satisfied with 75% of promised benefits. So Congress will have to step in. What has happened as a result of the COVID-19 pandemic? You had 40 million people out of work. That's dropped down to about 20 million. When those people are not working, they are not paying FICA taxes, and neither are their employers. So less money is going into the system. And at the same time, you had people losing their jobs that may have been close to retirement age that decided, hey, I was going to wait until 66 or 70 to claim, but now I'm out of work. I'm going to claim now. So you have more people pulling money out of the system. As a result, those trust funds, instead of running dry in 2034, it could be 2031, 2030, who knows? It just means that Congress is going to have to deal with Social Security reform sooner than it had anticipated. And now we've got the issue of politics. We think Joe Biden is going to be president. That hasn't been firmed up yet. We don't know if the Republicans or the Democrats are going to control the Senate. It looks like it may be the Republicans. And it looks like the Democrats may have a smaller control of the House. All this leads to divided government. A Democrat in the White House, probably Democratic-led House, probably Republican-led Senate. That's a recipe for gridlock. Maybe a whole lot won't get done over the next 4 years. But I think the difference between a Biden administration and a Trump administration, maybe you will get some leadership from the top, from the White House, saying, yes, we have to fix this, and here is my plan. We did not hear that from President Trump over the past 4 years.
Now, doesn't retirement-related issues tend to be bipartisan, Mary Beth, in that, we've seen a lot of retirement legislation that's been strongly bipartisan. You would think seniors vote, so both Republicans and Democrats would care about Social Security and not letting it run out because to me, it's a bipartisan issue. Why do you think it hasn't happened so far? And do you think the chances don't you think the chances are pretty good that this will get resolved? They might get resolved at the last possible moment, but it's going to get resolved so that people aren't, going to get 75% of their benefits.
I agree it will get resolved. And I think your instincts are probably correct that it will be at the last minute. Yes, Social Security has always been referred to as the third rail of politics, meaning touch it and you die. The idea being older voters, recipients of Social Security benefits, tend to vote in higher percentages than other people. Now, this past election may be a little bit different in that a lot of old people were afraid to go out and vote. But think of it from the politician's standpoint. Yes, they want to protect those benefits. Traditionally, Congress has never cut benefits for existing beneficiaries or those near to retirement. But how do you fix it? It's most likely going to be a combination of raising some sort of payroll taxes, maybe tweaking benefits in the sense of raising full retirement age, maybe from 67 to sometime in the distant future to maybe 70. Don't panic. I'm talking today's 2-year-olds might have to wait till 70. And maybe instead of taxing up to 85% of Social Security benefits, maybe it goes to 100%, but maybe the threshold for the people affected by that gets much higher. It hasn't been changed since 1983. So all of those things from a politician's standpoint, it's pretty much bad news. I'm going to raise your taxes or cut your benefits. So as a politician, I'm probably not in a hurry to do that. Yes, I want to make sure it gets fixed, but I don't have an incentive to fix it now, unless you have a strong bipartisan agreement. And by definition, if you have a divided government with one party controlling the White House and another controlling one or both bodies of Congress, things just don't move that quickly. And as we have seen over the last 4 years, so much animosity on the Hill, so little bipartisan cooperation, except in the case of the COVID emergency. That did give me some hope that when Congress was facing a real crisis, like a global pandemic and a deep recession, it could come together and pass things like stimulus legislation. Again, under a very tight deadline. So I think you're going to have to see this crisis breathing down Congress's neck before it ever does anything.
And I think that's common with a lot of issues in Congress. So I don't think Social Security is any different there. I'm going to shift gears a little bit to the participant side of the House. You've written a book on maximizing Social Security benefits. What do you think's probably the biggest mistake that the average person makes, the average retiree makes, with respect to claiming Social Security benefits?
Well, I think a lot of people grab benefits as soon as they are eligible at age 62, just because they can. And even though a lot of the polls and surveys will show that there's this increasing recognition of the value of delaying benefits until an older age when they're worth more, a lot of times those polls are based on people that are younger than 62, because it's theoretical. Oh yeah, absolutely, I'll wait, I'll get a bigger benefit. Once you get to that point, you're 62 and now I can actually claim, it's just too tempting for a lot of people to resist. Now, for some people, perfectly good decision for their personal situation. And as we're seeing in this COVID environment, some people who had planned to wait now are in a different situation. I lost my job, I need the money, I'm going to claim. Could be a good idea. I'm in poor health, I'm afraid to go back to work, let me claim. Possibly a good idea, but gee, I hear it's running out of money, I'm going to grab it while I can. Probably not such a great idea. That's the equivalent of my stock portfolio just went down by 30%. I'm scared, I'm going to go all to cash. The only thing you have guaranteed is you have locked in a loss. Same thing of grabbing Social Security as soon as possible. If one, you're still working, hey, I'm subject to earnings restrictions. I may lose some or all those benefits temporarily. I don't really need the money now. I'm married and I'm not thinking about the impact on my potential widow or widower. There are more pieces involved. I don't care what decision people make. I just hope they make an educated decision for their personal situation, and to see Social Security as one piece, a very important piece of their retirement income plan.
So kind of expanding on that notion, I mean, you have a lot of people who probably claim too early. On the flip side of it, are there people who are out there who probably forget about the health issue necessarily? Predictable sometimes. I mean, obviously, if you know you're in bad health and you have a chronic condition, that's one thing. But sometimes, I mean, I've seen people say, I want to claim early because there's no way I'm going to live till 80, and they live to 90.
Right.
So health aside, what are there any other specialized situations that you can talk about where it might not make sense to delay claiming to age 70, for example?
I think the idea of delaying until 70, and the reason we talk about this is, for every year you are willing to postpone claiming your Social Security retirement benefit beyond your full retirement age up until age 70, you get an extra 8% per year in delayed retirement credit. So if my full retirement age is 66 and I wait till 70 to claim, I'm getting a 32% increase. Another way to look at that is the difference of claiming as soon as possible at age 62, which in that scenario would give me 75% of my full retirement age benefit, versus waiting till 70 when I would get 132% of my full retirement age benefit, is increasing my Social Security benefit by 76% for the rest of my life.
Wow.
What other investment as a financial advisor can I say, I can guarantee you it's going to increase your income by 76% over an 8-year period? It's a smoking hot deal in the current zero interest rate environment, because you have to compare that to a risk-free return investment. What are we talking about? Your bank account. If I take that money at 66, I don't really need it, stick it in the bank. What am I earning? 0. Versus 8%, the government saying, I'm going to give you 8% a year. Now, somebody may say, well, I don't need it. I'm going to grab it now and I'll put it in the stock market. Great. You might make 30%. You might lose 30%. You've got to compare it to a risk-free investment. So for those people who are healthy enough, because frankly, it's like the lottery. You must be present to win. You got to be around to take advantage of this. And wealthy enough. If I choose to delay, what do I do for money in between? For people who keep working, problem solved. For other people, it may be a choice of, gee, do I tap my IRA 401k now in order to buy myself that bigger 8% a year down the road? I think it's a very important decision for married couples, having one spouse wait till 70 if possible, because then you're locking in the maximum retirement benefit while they're both alive and potentially a maximum survivor benefit. Who would it not be worthwhile for? For some single people, it may not be worthwhile. Truly single. You're not divorced, you're not widowed, you're single. Yes, you'll get a bigger check at 70. If that's a big, important part of your retirement income plan, it could make sense. But if you die prematurely without claiming, you don't have a survivor. Nobody gets that benefit. It goes back in the pot. Those truly single people may actually want to claim at full retirement age. Other people where it doesn't make sense. There are some public employees in about a dozen states who have a public pension that's based on work where they did not pay FICA, payroll taxes. Their benefits could be reduced or eliminated by some offset rules. So I often tell married couples where one spouse was private sector and the other one has this public pension, they may not want to delay, because the whole point of delaying is I want to create this potentially bigger survivor benefit. But if my spouse is not going to get that survivor benefit because they're a public employee, maybe it's not worthwhile.
So Mariette, there's a related issue. You've given a lot of good scenarios here. One thing that comes up, I know as an advisor, is financial wellness for women. We kind of see a lot of doom and gloom there, to be quite honest, when I read a lot of stuff. Women live longer. They may be out of the workforce, so they might not have maxed out their Social Security benefit. They may have less defined contribution and retirement account balances. Is it all doom and gloom, or are there things that women can do to improve their financial independence, so to speak, in retirement? Because I get a little worried when I read these articles, and I'm like, what can be done? You don't want to tell people, hey, you're in a situation where you can't possibly fix it. It's like telling someone who hasn't saved for retirement enough, hey, you need to save like 50% of your income, and they're like, well, I can't do that. So what are your thoughts about Social Security for women and the general larger issue of women having an adequate retirement?
Well, you're right. You point out the fact that women tend to live longer, and because in general, they tend to earn less over their lifetimes, which mean they have less money available to save for retirement. And they often take a break in their careers for caregiving roles, either for children or elderly parents or both. They have this unfortunate situation where they tend to have less in retirement savings, and they have to make it stretch over a longer period of time because they live longer. This shows you how important Social Security benefits are for women, because they live longer. And the truly elderly, those 85 plus, so many of them that 90% of their retirement income is coming from Social Security. It was never designed to be the sole source of retirement income, but it is truly a safety net and a lifeline. So that underscores my point for married couples of why their main strategy for claiming Social Security should be, how do I maximize the survivor benefit? And I do that by having the one spouse with the bigger benefit delay up until 70 if possible, to create what ultimately would be a larger survivor benefit for the spouse left behind. When you have two people collecting Social Security benefit and one dies, the bigger benefit is going to continue as that survivor benefit, and the smaller one will go away.
That makes a lot of sense to me. We've covered a lot of ground here, and I really appreciate you sharing your time on the Revamping Retirement podcast today. A special thanks to Mary Beth Franklin For Kara McCauley and our entire production team, I'm Mike Webb, and this has been Revamping Retirement.
The content in this podcast is for institutional investors and plan sponsors. The information is intended to be educational and is not tailored to the investment needs of any specific investor. All examples of investor gains and losses are hypothetical and intended to illustrate the importance of early saving and consistent retirement contributions over time. Investment decisions should be based on an individual's own goals, time horizon, and risk tolerance. Nothing in this content should be considered as legal or tax advice, and listeners are encouraged to consult their own lawyer, accountant, or other advisor before making any financial decision. Thank you for listening to Revamping Retirement.